What's going on, everyone? Good morning or real shaky morning, depending on if you're long or short equity today. Long or short tech, it's either an excellent day or a bit of a rough day. Welcome back to the morning stream, everyone. Just a quick reminder for anyone who is new to the stream. My name is Sean Ryan. I'm one of the co-founders at Predicting Alpha, and we run this morning stream 5 times a week where we basically try to give a 30-minute outlook into the market from a quantitative perspective, really trying to bridge that gap between what Wall Street is looking at and what we as, self-directed investors, self-directed traders have at our disposal. Because my honest belief, guys, is when the small guy is given the same tools as the big guy, we actually crush. We actually are going to win because we're faster, we're more agile, we have a greater risk tolerance. And then when we can even the playing field, that gives us a huge advantage. So let's dive deep into what we're seeing happening in tech today. Obviously, we have a really big tech sell-off. Things look like they're actually recovering a little bit right now. If we just look up Tesla quick, for example, Tesla was down, 8-9% at the open, and it seems to have rallied back down about 3.5% right now. So we're still seeing it take a bit of a hit over the last five days as well. We can see it's still down about 12% in the last week. Tech just getting absolutely smoked right now. But we're seeing some pretty interesting stuff as well. If we look at like the Dow Jones, you would expect to see this down a ton as well. But we're actually basically flat over the same time period. We're seeing, major tech take this huge hit, but we're seeing the indexes stay afloat, and that is a very interesting thing to see. Never seen that before, but going to look more into this later on in the day. Any other earnings?
Yeah, so I'm actually noticing we've got NVDA tomorrow.
Yeah,
after the close.
Nvidia is what we're going to look at. What else?
So NVDA is tomorrow after the close, but an interesting one for tonight is Square.
We got Square?
We got Square tonight.
That's SQ, right?
That's SQ, and we got Lowe's tomorrow morning.
Lowe. Okay, yeah, Lowe was one that we wanted to take a look at because of Home Depot came out with their earnings, right? So just a quick look back at an earnings that we looked at yesterday. We were taking a look at Home Depot. Now, obviously, it looks like Home Depot got absolutely destroyed, but if we come in here and take a look at how this progressed over the morning, I believe it opened up around 2.5% down. Let's come over here. Take a look at Home Depot here. We're actually seeing implied vols not get destroyed either yet, which is super interesting. Yeah, you see that small gap down, and then it just gets absolutely crushed right after. But the tricky one about this is I don't know if I would have, it's very easy for someone to sit here and say, oh, it didn't move right in the morning. Easy exit, right? Just get out of your position. But the implied vols didn't get destroyed, right? And some of that might be some macro vol picking up. There was a number of reasons why we might not have seen that implied move just get destroyed. But it's very likely, don't feel too bad if you're in the Home Depot position and you ended up holding into a little bit of a loss. It happens sometimes, right? Obviously, preferably you would have gotten out before. But, right, what we would have looked for in this situation is the stock didn't move much right at the open. It was less than our implied move. But the implied vols didn't get crushed. So we probably would have held waiting for that. And then we would have been carried over into this bigger down move. So just something to think about moving forward is maybe if we're seeing all this macro vol happening, it's worth exiting earlier, just taking a little bit of profit and getting off the table. So what else are we looking at here? So Home Depot stock down 5% right now. If we look at Lowe stock, down about 3% so far into the day. One thing we're going to talk about on this morning live is we are going to talk about macro vol, but then we're also, sorry guys, I just had to look at something there. We're going to talk about the macro vol, and we're going to talk about a couple of these earnings, right? So we're going to see how Lowe's implied move has changed because of the Home Depot earnings. So let's come in here and take a look, because yesterday vols were looking a little cheap going into the earnings. But what you can see here is they've picked up quite a bit. This was down maybe 0.7 of a percent yesterday, and we see that it's picking up a little bit now. It's not looking quite as cheap, but still a little bit on the cheaper side. Now, let's take a look here for times when the implied move was around 5%. How did we perform looking at the straddle price? Or let's see, IV30. All right, so these lower IV ones. So let's take a look maybe in the middle range here. So yeah, we can see like if we do carry some long vol going into low earnings, we are not gonna lose a ton if we're wrong. And we have that potential for, you know, a big winner if we are correct, right? If we do see a big move here, it helps that we see some of this macro vol also kind of coming in. Obviously, it's not impacting low too much. We see it more in the tech sector. But if you're, you know, overall thinking things are getting a little shaky, you know, it's a little icing on the cake that you get to carry some long vol if you're looking at the Lowe's earnings here. Besides that, we can see something that I really like whenever I would do a long vol plays. We can see that buying volatility going into Lowe's earnings, right? Buying that straddle has actually been profitable. One thing that we always like to see as well is let's have a look at what the position is actually going to look like in the morning. So we come over here to the Feb 26. We're just going to pick up an at the money straddle. Let's do this. All right, so here's what the position looks like right now. But what we're really interested in is what is it going to look like tomorrow? So let's come here. We move forward one day. And now we need to adjust our vols to understand, you know, because the vol is obviously going to get crushed, right? This is a cool thing in the PA terminal here. We strip out the event and non-event vol so we can see how much we expect it to drop by. So 47 down to 33. So that's about 14 points of a vol that will vanish tomorrow. So we can come in here, vol adjuster, minus 14%. This is what the position is going to look like tomorrow. If Lowe's pins, let's say we put on a one lot, right? So this would be the lowest that you can put on for the position. We're thinking our max risk on this is about $300, right? $289. And if we see a move of about, you know, well, basically that implied move. If we see about a 5% move or greater, we are going to make some pretty good money. Right? You can see this, this line's pretty steep. If we were to get, let's say, a 10% move, right? So move down to about here, you know, we would be making about 150% return on our risk. I'm not seeing any comments today, guys. Is everyone, you know, was everyone up late last night, having a groggy morning? Where are you guys at today? I would have thought at least, you know, at least Eric would have been here, popping in saying hello, but looks like it's just me talking to myself today, guys. There, Sylvain, how are you doing, man? Thank you for being there. Pranav, honestly, where have you been the last little bit? I feel like Pranav, I feel like we haven't heard from you in so long. I hope we haven't been too mean to you in the chat, you know. Yeah, I guess you guys are busy managing that bloodbath, eh? Yeah, John, I get that, man. Is there anything in particular I can help with? Well, what sort of positions are you in, and what sort of, you know, I guess, what's your predicaments right now? You know, I would love to be able to help. Is it a position you're in that you're not sure if you should be adding to, or if you should, you know, be cutting? You know, these are the types of problems that people often face when in a little bit of a crisis like this. And I'd love to be able to, you know, give you my views on things if you want them. Yeah, Sylvain, I was looking at Home Depot Vault. It didn't move at all. I'm thinking that might be a little bit of macro picking up, right? Offsetting it. Because if you look at what actually happened, the jump was not that big, right? The jump on Home Depot was only 2.5%, and now it's down 5%. We saw a huge intraday move so far, which really interesting. Much bigger than what we usually see. We see that Lowe's implied move here didn't change that much, so it might be worth picking up a little bit of this, especially with this positive P&L. One thing that Jordan was mentioning yesterday is that you could buy a directional trade for Lowe's in the direction that Home Depot moved. So Home Depot moved to the downside. If we look here for Lowe's, right? Not a ton of skew for us to take advantage of, but maybe structuring out some sort of directional trade might be worth looking at. Yeah, Pranav, how come you haven't traded in a while, man? What's been keeping you busy these days? Cedric, good to see you, man. Joey, you already know what's up. Curtis, good to see you too. Curtis is saying, how afraid should I be to play tech earnings with all of the craziness going on? So I think there's a couple things that you want to know, right? In the end of the day, you are going to get paid for taking on risk, right? At the end of the day, there's no free money. There's no free lunch here. You're going to get paid for taking on risks. And what you actually want to be doing is looking for the risks that other people don't want. Because, in a sense, you can provide that service to the market in an area where there's no supply and tons of demand, right? Everyone wants to buy vol going into these tech earnings, especially with all the craziness going on. And what we want to look for is events where that event volatility is overpriced, where we can take on that risk, get overcompensated for it, and then sure, we will obviously take some losers, right? This is not a no strategy wins 100% of the time, and if it did, I wouldn't be sharing it with you guys. But yeah, wouldn't be too concerned. You think it's more like a tech dip buy rather than a sell-off, eh, Kyle? Are things bouncing back completely now? Would you look at that? Would you look at that? Tesla basically flat. Huh, Jordan? Not bad. You know what's kind of cool though, guys? So, over the last few live sessions, I've shared with you how we have this short vol Tesla trade where we're short like the Delta 50 2-year straddle on Tesla. We're thinking that vols are going to come in about 15 points. We saw that 8% drop yesterday, 8% drop today in Tesla, and the position barely changed. Longer dated vols are actually not reacting to these short dated big drops, which is a very interesting to see, and it's keeping our position alive, which is pretty cool. Now, something I shared last night, which I guess I will share with you guys today, is if you are bearish here, right? If you think these Qs are going to keep dropping, there's a number of different things that we are able to do. Yeah, Pranav, there's a lot of weird stuff going on, like tech dropping like crazy. Pretty much only the Qs have been hit, right? If we look at Dow Jones, for example, it's basically flat. Perhaps saying when Jordan shorted Tesla vol in Jan of this year, it did fantastic. I know, right? It's Pranav, you should go back and watch the live on the in-depth research on Tesla. I think you'll find it very, very interesting. It'll give you a ton of insight into how you can improve your Pranav's party place reports. Right? Pick up a little more R, and you're gonna be doing some really cool stuff for those reports. Which I've been missing, by the way. I'm expecting one on my desk today. All right. So let's come back, take a look at the Qs. All right, let's say you expect the Qs to continue to trend downwards. If you wanted to take a view on this tech sell-off, I honestly think, or, tech dip buying, however you want to look at it, right? Whatever your view is, you can do that by coming to the Qs here. There's lots of, tons of skew in the Qs right now, right? So I'll actually, I'll pull it up quick. Let me just, let me show you this. Let's come over here, pull up the Qs. Check this out, guys. So we look here at the skew. We can see tons of put skew right now, right? And if we look at this, it looks really steep, but something we always need to think about is, well, for something like NASDAQ, we expect there to be put skew, right? Wouldn't it be surprising if we came in and the Qs had call skew? It'd be absolutely mind-blowing. So how steep is this? Right? How much put skew is there relative to what we normally see? How do we know that this is anything special? Well, what we can do is we come up here to where it says implied vols. We switch it over to skew, and you can see that, back in the crash, we saw a skew of about 8. And right now we're seeing a skew of about 7. It dipped a little today. Yesterday it was up near 7.5. Right? So pretty serious skew right now. Back to basically all-time high call skew or put skew. So we can come in here and we can do something to take advantage of it. Now, I was originally going to say if you have a view this week, but I think 3 days right now for any sort of significant move might be a little bit tight of a timeline. Obviously, doing those where you'd get the most compensation if you were right. But let's come out to March 5th here and see what we can do. So maybe if we do like a 1-3-2 fly, we could get something good going here. So let's first price out our straddle, right? The straddle is the market implied move, so it's oftentimes just what we use as the standard for picking where we buy strikes, put wings, things of that nature. I know I said it yesterday, but today I'm releasing that Iron Condor wings video where I go in depth. I think I did a really good job of explaining how I pick my wings for an Iron Condor. So make sure you, if you're trying to learn more about how that happens, either keep an eye on the channel or hit the notification bell and it'll let you know when I post the video. I always thought that notification bell was just for the algo, but I think it actually has some use as well. But let's see here. Right now, this straddle going for $13. So let's call it a smooth $14 just to make it easy to do this. We're going to come here to the put side. It's trading at about 317. We're going to buy an unbalanced butterfly. So we got the 317 strike. Then we're going to go down 14, so 303. And then we're going to go down another 7, so 296. Let's see what this looks like. Oh, it looks a little shaky. Okay, it's a pretty good payoff graph. Let's see. Let's expand this a little bit here. All right. Bring this down to one lot so we're all on the same page. So, with a trade like this, you're basically betting on the Qs continuing to trend down. But what you're doing here is you're taking advantage of that call of that put skew. We're buying this Delta 50. We're selling this out here, the Delta 25 put. And then we're going way out here to where there are a few pennies to get a little bit of a hedge just in case this thing absolutely rips to the downside. We're basically saying the market's pricing in this massive move to the downside, but we think, sure, it'll trend downwards. The most likely move is a down move, but it won't be this blowout that the market is anticipating. And by having that view, if that is the view you have, this structure here gives you a lot of good leverage, right? You're getting about a 5-to-1 bet on the Qs trending down about 5% in the next 2 weeks. So if we see that down move, right? Not that blowout to the downside, but a down move in the Qs, this is a trade that expresses it really well. And the best way to always, think about these trades, and probably one of the reasons why I love the Thinkorswim Analyze tab is that it allows you to compare positions really, really easily. So let's say you just buy an out of the money, let's say you think that, what was the peak here? 302, 303. So let's say that's what you think this is going to go to. So you decide to come here and buy like an out of the money, maybe like a Delta 40 or even like a Delta 30 put, right? You go way out of the money here and buy this put. Let's compare the positions. All right. So with this trade here, let's say you're buying a the 307. Let's say let's just make it a smooth 307 strike. All right, check this out. The 307 strike put is going for $3.34. That's a lot of money. Your break even is at $303. If you wanted to make a 100% return on this position, you basically, let's drop this down to one lot. You basically need this to go to, right, at expiration, you would need it to go to, let's move this up a bit. We'll just look at it at expiration. Right, you basically need this thing to go to $296, right, to make a 100% return. Now, is that your view? Right? The whole point of this is those calls are expensive. And unless your view is that this thing is going to go down to, $270 in the next 2 weeks, buying this call or buying this put, it's bad. It's a bad way to express a view in the market, right? When you buy this put, you're buying the potential that this thing goes to zero. Or you're buying all this over here. And is that really what we think is going to happen? I don't know. I don't know about that. So compare that to this, right? Where, you risk $200, you make about $1,200 if we see this thing trend down, right? Huge risk to reward. And it's just a better payoff because we're more specific with our view, right? We're not paying for all this exposure over here. We're selling this crazy middle part, getting a little bit of a hedge. And if it lands in this range, the money printer will turn on for us. So those were the main things for today. We got one more that we're going to look at. We're going to take a look at NVIDIA earnings. If this has been useful to you guys so far, all I ask in return is just drop a like on the video. I'm seeing 12 of you guys tuning in right now, but I'm only seeing 4 likes. And that breaks my heart, guys. So please drop a like on the video. It helps me out a little bit. YouTube algo gods still not ranking me up there. Stock fraternity still at the top of the list. Those bastards. Let's take a look at NVIDIA earnings here. Earnings analyzer. So NVIDIA earnings looking pretty pricey. Obviously, NVIDIA had a bit of a big move today. Let's see if it bounced back. All right, bounced back a bit, sitting at 2.5% down. Looking at the skew here, nothing crazy to look at. Rob saying I liked it twice. Does that count? Rob, I appreciate it, man, but I need you to sign into a separate account to like it that second time. When you click like twice from your account, it actually unlikes it. You don't like my haircut, Pranav? Wait. What do I look like here? Oh, Pranav, my hair looks great, man. Why are you? Come on, man. Come on. I was going to say something really mean, but I decided against it. Not on stream. I'll roast you in the DMs later. Yeah, thanks a lot, Drake. Hope everything's been well, man. We need to chat soon. It's been quite some time. I hope everything's been going well. Rob saying I haven't cut my hair since the pandemic started. All right, man. A little overdue for a cut, but to each their own. To each their own. Dislike this if you want Jordan back. Pranav, you better not have disliked it, man. I swear to God. All right, NVIDIA earnings. Sell it. Short vol, baby. Look at this. Implied move, 6.83, just a little bit higher than what we normally see implied. So I'm not, market's not really implying anything that it normally doesn't. And we see that on average, market is overstating this move. This is one of those cases where it looks like it's just a good opportunity to be short some vol. You know, look at this straddle P&L down and to the right, which means if we were on the other side of this, selling that vol, it'd be up and to the right. We can also see first quarter, we haven't seen any of those big blowouts that we sometimes see happen. Right? If we look at the moves here, you know, most of the time we're going to be pretty damn safe here. You know, here, here's the seasonal impact per nav. Now, per nav, this is a big stock. Don't be yeeting your account on this. Don't be getting Disney FOMO. And because I think per nav missed out on Disney.
He did, eh?
I think he did. But it would have been like his entire account on the trade.
Yeah.
I'm joking, man. But, you know, it wouldn't have been his entire account, but he would have put his entire account on it. Yeah, so just be careful with this one, guys. You know, it's a big stock. We'll price it out. We'll take a look. Oh, actually, he was in Disney. Oh, my bad.
Oh, that's good. Oh, he must
Good.
have made a killing.
Yeah, you must have made a killing, man.
Good job, Pranav.
You hear that? You hear that, Pranav? Your father said good job. He said good job, man. First time he's told you that in a long time, right? So let's go structure out something here because this looks pretty good. Let's quickly take a look at what the, you know, we got a little bit of skew here that might make these wings a bit pricey. I'll definitely stress the position so you can take a look. Let's see. So we're going to come here. We're going to head over to NVDA. Papa Jordan. Nice. So let's get rid of some of these old positions here. And we'll come to the Feb 26. Isolate that exposure to the event vol. First thing we're going to do, as usual, we're going to come here. Price out that straddle. This is that implied move by the market. It's about $40 implied move. So what we're going to do is we're going to come here. It's trading right at 555 bucks. We're going to sell that Iron Condor. All right, we want to basically say, okay, so we see the straddle's going for about 38 bucks. How much are we giving up by picking up these wings? Let's find out. All right, so we put our body strikes at 555. Then we're going to go up $80. So what would that be? 635. All right, correct me if my math is wrong here, guys. And then we're going to go down to 55, 475, I guess. Let's see if this looks about right. Does this look right, guys? Let's see. All right, it's balanced. Nice. Didn't screw it up. So we can see here, still kept a pretty good amount of our break evens. We're paying about $3 for these wings, giving it about 1% or 10% of the premium there. So easy way to think about that is we've gone from selling a 6.8% move to about a 6.2% move. So I still think there's edge buying these wings. You know, for those of you that are a little shook up with all the market volatility recently, definitely want to have some of that protection. You can pick up your wings 2 standard deviations out, right? $80 on either side. It's going to cost you about 0.6, 0.7% of the move, which is not the end of the world, seeing as you still have about 1.5% implied move of edge. And, you know, this long-term P&L here, we can see there's really only been one event in the last 3 years that would have caused us some pain. Things to note where it wasn't in this quarter. Obviously, since it was just one, it doesn't mean too much which quarter it was, I don't think. But, yeah, we got a pretty reliable trade here. Pretty reliable trade. Now, as for sizing, keep in note that, if you put on one lot of this, you have a max risk of about 4,500. This is a big trade. It's a big trade, right? You can put on a half lot if you do the naked straddle. Cost you maybe, max risk of 2,000. The payoff is there though as well, right? Looks like a pretty decent trade. But you need to have a decent sized account to be able to put this on, right? This is not something you're putting on with a 3K account, because in the end of the day, always remember this, right? We do all this research, right? We take this data-driven approach. Nothing's for certain, and our edge is small. It's there. It's tangible. We have an advantage looking at information like this, but it's not enough that you can just yeet your account on one earnings trade. We always need to keep that in mind, guys, because if you get taken out of the game, then, you're watching from the sidelines. You're out. Right? Number one rule, stay in the game. So with that being said, guys, that's really what I wanted to cover on this morning's stream. If you guys have any stocks that you want me to take a look at, I'll be happy to do that. Quick note, I've been, I promoted on last stream, and I will chat about it quickly again now. Predicting Alpha, we're all about giving access to this type of data and kind of trying to create this new breed of trader, right? We're trying to, I call it the retail quant, which is basically, he has all the tools that alleviate the need to know all the math, right? It's like the equivalent of having a Bloomberg terminal for the big guy. And he's basically the big FU to Wall Street, right? Takes what they know, has his own risk tolerances, and is able to actually pull some money back over to our side. So we're doing a free trial on, for the Predicting Alpha terminal and the community, everything that comes with it. It's a 1-week free trial. You're going to be signing up. You just cancel. You won't get billed. We're going to be starting that free trial in about 3 weeks. So it's not happening just yet. But if you want to be on the list for that, I've only told this stream about it. I haven't talked about it off this stream. If you want to be included for that free trial, all you need to do is send me an email to Sean@predictingalpha.com, and I will add you to a list. I'm going to be doing about 50 of them where you will get access to that. Pranav, of course, man. There's always a free trial for you, all right? But we need you to keep sharing some memes in the water cooler chat. It's been awfully quiet in there without you. Rob saying, tell Jordan that we need to include neural networks into our tool so that people will start throwing some serious funding at us. Yeah, honestly, right? Where's the Series A funding? I want to buy a boat this summer. I need that Series A funding. Come on. Rob, you got any hookups? You going to get us on Dragon's Den or Shark Tank or something? Joey, I miss Pranav as well, man. Yeah, I don't know, guys. Series A funding soon. Lambo soon. You know how it is. Going to be moving down to San Francisco. All right. Well, with that being said, guys, I'm going to wrap up the stream there. Guys, the PA guys here, I'm sure I'll be chatting with you in the server very shortly. But with that being said, we will see you all tomorrow, and good luck with the bloodbath today. Try to make it out the other side alive. All right, guys? Conclusion about low. Curtis, looks like an okay long vol opportunity. Won't cost you a ton if you're wrong. And has potential good payoff if you're right. All right, we saw it today with Home Depot that the move, the jump wasn't crazy, but the move was good. We didn't see too much of a reprice in low. So what we could do is one of two things. We could just outright buy vol, or what Jordan was thinking might be a good idea is to structure it into the direction, right? Mm-hmm. Yeah, structure a trade into the direction that Home Depot moved. Right, so Home Depot had a down move. So come here to low. Let's see what we can do quick. All right, if we come here, maybe do something like this. Let's see. Say $10. Let's see if we do this. $165, $155, $150. Look at that. What do you guys think of this structure? Now you see this. This is what a true, you know, high finance trader puts on. Things like this. Right, look at that. It's very little chance of being wrong, no matter which way you look at it. So this could be kind of cool. Right? About a 1 to 9 risk reward, betting on this thing moving to the downside. Right? No crazy blowout. Move to the downside. You're going to get paid very handsomely. I wish Eric was on this stream. These are the types of trades that he loves. I'm going to screenshot this and I'm going to post this in the group just for Eric. Let's throw this in there for him. See, here at PA, we care about our members. Even if he bailed on the live, he's not here to keep me company. We're still going to look out for him. Okay, guys, with that being said, it is now definitely time for me to go get some food. So I'm out of here. We'll see you guys tomorrow morning. Take it easy.